structurally really strong. We're at peak levels of long-term holders. It's not a bear market if you look at that metric.
Willy Woo is a leading on-chain Bitcoin analyst who uses different models and indicators to predict price movements and other similar signals that could help everyday investors make the best of their investments. Over the years, he has provided insightful signals about the asset, though, like other leading analysts, his predictions were far off the mark in 2021. In a recent interview, Willy Woo talks about his long-term, mid-term, and short-term predictions for Bitcoin. He explains that the crypto is in a phase transition, which has changed market dynamics. Notwithstanding, Willy Woo still maintains that we are not in a bear market, and the market is still structurally strong. Welcome to Savvy Finance. In today's video, we examine Willy Woo's thoughts about the current market situation and his thoughts on Plan B's stock-to-flow model. Willy Woo states that he loves the stock-to-flow model, but it lacks a particular element that can make it so much better. If you would like to listen to all these as well as Willy Woo's new favorite model for Bitcoin, please stay tuned. One last thing before we begin, ensure you give this video a thumbs up and share your comments in the comment section below. Willy Woo believes that Bitcoin is not in a bear market, but the market dynamics have just changed. He explains that Bitcoin is in a maturing phase, growing steadily to accommodate all the new and big players. He adds that similar transitions have occurred in the past, often having permanent effects on market signals and price movements. With the introduction of futures markets and spot investments, Willy Woo adds that everything we see now is just a simple change in market dynamics. Listen to Willy Woo's explanation.
Yeah, I think we're going through a phase transition. Bitcoin's gone through many. Probably the last great one was the start of 2013 when futures arrived with BitMEX, and that changed the complete dynamic of trading. And then the next phase transition was the introduction of institutions in a big way with MicroStrategy that led a lot of credibility amongst hedge funds. So we had Ruffer Invest, any number of hedge funds and high net worth people in that space, like Ray Dalio came out and said he was investing. So there was then this validation. So a lot of spot investment from institutions and family offices, which happened in pretty much 2020, and now we're in this phase where I would say another transition where the market's maturing, getting more sophisticated. We've finally got an ETF. Unfortunately, it's a futures-based ETF. We've got significant volume on the CME futures exchange, so we've got very large, I'd say, Wall Street players that trade it on the futures market, and that is having very large influence on the price.
The on-chain analyst also talks about the sell-off that started late last year. He explains that sell-down from the futures markets overpowered the rest of the market and caused the price dip. Though the spots markets were mainly accumulating at first, they later switched to selling themselves. Willy Woo once again mentions that this is a signal of changing market dynamics because a sell-down in the past wouldn't have caused such reactions. Listen to the on-chain analyst speaking about this.
That was fully from sell-down from the futures market. They started selling down while the spot investors were accumulating. And usually in that situation, it's going to resolve one way or the other. And this time, the futures sell pressure overwhelmed the spot buyers, and then they switched to selling. So, like, this is the first time that I've seen a significant move of this scale where on-chain lagged. So that's very interesting to me. The top was really from a different market, quite different from tail end of 2020. No matter what the futures markets were selling down on, the tidal wave of money coming in, buying spot, withdrawing into their on-chain wallets, overwhelmed the entire market. So it's interesting now, and it comes in a time where structurally we're like a lot stronger than the last top, where the whole thing capitulated under the China sort of mining ban and all this negative ESG narrative. Now it's different. It's just the futures selling down while everyone's holding on to their coins. We saw a little bit of hodlers sort of divesting a bit, but nothing major. And so if you look at that in the macro terms of demand and supply,
Yeah.
the guys that have held their coins for a long time, like 5 months or more, They're not selling, right? Like it turns out anyone who's held their coins for 5 months aren't selling. The history shows that they sell once there's profit to be had. Why not, right? You've held your coins for 5 months. You're not going to sell now. So we saw a bit of that selling as we ran up to 69,000. They bought, in the sub 40. They made a nice profit. And the moment we dipped it below the 40,000, they stopped selling actually, and they started accumulating actually as a cohort. So structurally really strong. We're at peak levels of long-term holders. It's not a bear market if you look at that metric.
Willy Woo also talks about Plan B's stock-to-flow model. He explains that he loves the model and thinks it has a lot of potential, but it doesn't account for an important element, the existence of altcoins, which are taking a huge share of Bitcoin's dominance. This, Willy Woo explains, is why the model has seen some problems in the recent past. He adds that if the model dials down a little on the Bitcoin maximalist beliefs, it would be a very formidable model. Here is Willy Woo on the pitfalls of Plan B's stock-to-flow model.
I think it's got fundamentally, the idea is good, right? The fundamentals of the idea is that we've seen in the nature of financial markets, this is the end game of how we value things. So that's solid, right?
Mm-hmm.
And so then he did it with Bitcoin, but I think it was with a mindset of a maximalist saying this is the only thing that will exist. So even in that, the model breaks down because Bitcoin gets to zero inflation, so the price should go to infinite, and it should be the rule of the universe. And I think if you to take the model and then you add to it the real dynamics of the market of competitors to Bitcoin, and there are competitors because you cannot tell me Bitcoin dominance is 100%. It's far from it, and it's sliding.
It was for a while, but you're right. Now it's 50%, which means everybody's eating market share, right?
Yeah, and you'll notice that it started to fall away from that trend line because the dominance started to drop. And so I think that it was skewed. I think Plan
He's
B
missing that in the model. That's right. That's the key.
He didn't acknowledge shitcoins. Like,
Yeah.
as much as
because that
you
money
may
would have
hate it,
otherwise gone into Bitcoin. Yeah.
Yeah, you cannot create a model in what you wish the future will be. It has to be based on reality.
Pitfalls notwithstanding, Willy Woo explains that the stock-to-flow model uses two important factors. These factors, according to Willy Woo, are scarcity and valuation. Though the model doesn't account for demand and supply and how the relationship between the two could alter price movements, Willy Woo believes that scarcity creates a dynamic around demand and supply, and a model that uses it as a point of consideration doesn't need to worry about demand.
It's about scarcity and valuation. It's not a demand and supply model. The idea around it is the more scarce it is, that creates a dynamic around demand and supply, both sides, not just demand, because every market we see demand, you see supply meet it, right? Because otherwise you can't buy the asset if no one's supplying it. So it's a model around scarcity and valuation. And so it sidesteps the issue of figuring out the random walk of demand and supply, which is what I do to get there. It creates a really nice, it's kind of like E equals MC squared. It distills down into something really clean, and you don't have to look at demand and supply. Everyone's trying to work that out because it's a complex beast. And you just go, yeah, look at this. This is scarcity, and this is how we should value scarcity. I just don't think he acknowledged the real scarcity was actually inclusive of Bitcoin, which diluted the scarcity, inclusive of shitcoins, which dilutes the scarcity. I actually love the model. I think that it just needs to be broader.
Moving away from Plan B's model, Willy Woo also talks about his favorite model at the moment. He explains that he is currently focusing on the Bitcoin liquid supply shock oscillate, which considers several factors, including the activities of swing traders, investors that never sell, coins sitting in exchanges, those that are out of exchanges, and other important signals. He adds that these factors create a supply and demand dynamic that makes predicting the market easier. Here is Willy Woo's explaining the model.
I'm looking at it technically called the Bitcoin liquid supply shock oscillator. I'm looking at it right now. And so it's effectively a demand and supply. So supply shock is badly named because it's not a supply shock. Supply shock is actually a ratio. It runs a ratio of the coins that are not likely to be sold divided by the coins that are likely to be sold. And so and so there's a whole family of supply shock, but you could call that on-chain demand and supply. And so, it's just broadly a category of, wow, how do we do this? Well, I know an idea. How about we let's say all the coins sitting on exchanges are likely to be sold, and all the coins that are off the exchanges are unlikely to be sold. You run ratio. That's a demand and supply. And so, what about the guys that have held their coins for 5 months or more? They're unlikely going to move because they've held for 5 months. All the other guys. So you do that ratio, and that's also a demand and supply. And then now the really juicy stuff is like, let's look at all the wallets and all the address and cluster them, and look at the behavioral patterns of these investors, and name the ones with high precision that don't sell. They just buy. They're like Michael Saylor versus the swing traders, and then you run that ratio. So that one's really timely. You get down to it's 24-hour responsive, and so that's what I really like.
Thanks for watching the video. Be sure to drop your comments in the comments section below and drop a thumbs up for the video.